Okay, you mentioned about we have so far talked about trading opportunities as well as possibly the price target for oil. What do you think investors and traders should look out for in 2015 in terms of maybe dangers or red herrings, stuff like that?
The biggest problems in 2015 are going to be what happens in the Middle East and in Europe. The biggest threat to markets in 2015 is Middle East instability and European instability out of the Crimea and elsewhere. Europe's a basket case. They've got high unemployment. They can't get their economies going. They've got high levels of debt. They're beginning to disintegrate. That's the major risk, not the South China Sea. The South China Sea is irrelevant. The real risk is coming out of the Middle East and out of Europe. What we need to look for? We need to be aware that these trends that have been in place in US markets will come to an end. Quantitative easing will have an impact on the way that markets behave. But we still don't know exactly what that impact will be. As they say, some of this is baked into the cake. In other words, we've been talking about it for 3 or 4 years, so when quantitative easing finally ends, no one's going to be really surprised. But there will still be an impact. So what we need to do is to watch those markets, and we're watching for end-of-trend behaviours. We're also looking, that's end of uptrend behaviours. We're also looking for end of downtrend behaviours. We're talking about oil, as we were a moment ago. We think it's going to consolidate somewhere around the 38 to 48 level. We're looking for consolidation and trend rebound patterns. That becomes our buy signal. We've been short on oil and gold for quite a while. Now we're looking at consolidation to develop those end of trend patterns so that we can start to go back long on those sorts of commodities. Key factor is we can't really tell what's going to happen in 2015 or 2014 or 2013. What we have to do is prepare ourselves so that we can recognise the change quickly and develop the appropriate strategies and tactics when those changes develop. And that's part of the skills and techniques that we'll be talking about in the seminar that's coming up. And this is, some of it's old material, and it's good to revise on that because we have to apply it in a new situation. That's the key factor. We're still using some of the old tools we've used in the past, but we need to modify the way that we apply them in a new situation. And of course, we're also bringing in some new techniques such as ants trading and volatility trading, designed particularly to help with the current market behaviours.
Great. So what else would you be covering in this upcoming seminar?
Okay, we're going to look, as we said, at the central market patterns. We need to be able to work out the difference between a correction and a trend change, because a correction is a buying opportunity. A trend change is a selling opportunity and a chance to go short. So how do you tell the difference? How do you know that this is only a correction and therefore the trend is likely to continue? This applies to S&P, to NASDAQ, to Dow, it applies to gold, it applies to oil, it applies to the Shanghai Index, Xianggang, Hang Seng, etc. So understanding what to look for and how to recognise it is really, really important. We'll be looking at targets for 2015, what our index targets are for the major markets in the world, but we'll also be looking at the modern market disruptors. Now, if we're looking at the taxi industry, we know that we don't have to go and use ComfortDelGro booking anymore. We can go grab taxi, etc. It's disrupted the industry. Well, financial markets aren't immune from the same sorts of disruption. There are significant changes that have taken place in the last 1 or 2 years that have disrupted the way that markets behave, and they have made it more difficult for independent and private traders and investors to work. We have to change some of the methods and our understandings of the markets. Now, the most important parts of those are things like high-frequency trading and exchange-traded funds. Everyone likes exchange-traded funds. They can do a lot of good things, but they also change the way that the market operates. It makes it more difficult to trade individual equities. So how do we take our equity trading skills, and they're not working quite as well as they used to. The opportunities are there, but they're taking longer to develop, and they don't deliver the same sorts of returns as they used to. Now, we don't want to get rid of our skills, so it's a long time and a lot of money to learn how to use those. So how can we apply them in other markets? How do we apply them to commodity trading? How do we apply them to FX trading? How do we apply them to index trading? We can use those skills there. We should use those skills there. But applying them requires some small adjustments. So we'll be looking at how you shift your equity trading skills into other parts of the market, other segments of the market, be it warrants, be it CFDs, be it FX, and apply those skills more effectively. Now, part of that, we'll be looking at FX markets and the ANTS trading solutions, how we can take our trading skills And rather than having to spend an awful lot of time trying to find a whole different range of opportunities, that's the problem with equity trading. We're always trying to find new stocks to trade. But one of the advantages of FX markets is that we can take a single technique and apply it across multiple currency pairs and still get the same sorts of results. And then we can scale up our results because there is no limitation on the size that we can trade. Very few of us are George Soros, so we're not really worried about pushing the FX market around. But you know yourself, we're trading equities, we want to buy 20 lots and there's only 5 lots available. We push the market around. When we sell, the market moves away from us. So it's a problem. But we can take those skills, put them into different areas, and we can apply them on shorter time frames. We can take the analysis skills we use for equities and apply them to CFD and warrant trading and get better results. And we'll also be looking at 2015 commodity outlooks, where we think the prices of oil, for gold, for silver, for copper and so on are likely to go. Now, these give us a general background. They don't tell us specifically how to trade those areas. But the key factors we're looking at, where's the support, where's the resistance, how can we tell when the trends change? So what we're looking at is how we apply our existing skills in new markets to improve the return so that we can do better than the 3% that the SDI gave us in 2014.
It looks to be a very interesting and exciting talk that you'll be giving during the seminar. We look forward to attending it, and I'm sure our viewers will look forward to it as well. Thank you very much for your time, Mr. Guppy. Thank you.
My pleasure.
We look forward to meeting you again. Thanks.
Good.